I want to thank everyone that has joined today's discussion, distinguished speakers, participants joining us from around the world. I want to welcome all of you officially to today's discussion that will focus on raising tax revenue through equity and inclusion, taxing high net worth individuals in Africa. Just to note that this is a side event at the ongoing 4th International Conference on Financing for Development that is physically taking place in Spain, in Seville. And many of you are probably in Seville. But to all audiences, wherever you're joining us from, we thank you for joining us. I will be your moderator today, but just to introduce myself to you. My name is Gerald Biarugaba. I work with Oxfam. I work as the advisor on extractive industries, and my work straddles extractive industries and fiscal justice in Africa. And some of you might know, Oxfam is a global movement of people working together to end the injustice of poverty and inequality. As I indicated, it's my pleasure to have all of you join us today for this very important discussion. We don't take it for granted that you are able to join us. Let me also at this point recognize and acknowledge the organizations that have worked together to put today's session together. Oxfam, the International Budget Partnership, and the Global Initiative for Economic, Social, and Cultural Rights. So thumbs up to the organizations that have worked together to bring us together for today's discussion that is going to be a very rich and informative discussion. Just as we get started, I would like to announce a few housekeeping guidelines that will help us run a very successful show. The event will run for 90 minutes, so we'll be together for the next 90 minutes. A very fruitful and informative 90 minutes. So it will run from 2:30 p.m. to 4:30 p.m. Central European time. So I know that we are all located in different zones, but yes, so for the next 1.5 hours, we will be together for a rich discussion. The other I would like to announce is that we are offering simultaneous interpretation in English, French, and Spanish. So if you look at your screen, at the bottom of your screen, kindly click the interpretation icon at the bottom and then select your preferred language, either English, French, or Spanish. So we will have the format in which we'll run this discussion. We'll have a panel of speakers that will speak to us for the first about 40-45 minutes. And that will be followed by a Q&A, or question and answer session. Please ensure that you type your questions in the Q&A box. Again, at the bottom of your screen, you should be able to see Q&A. Kindly put your questions there, and I'll be able to pick them up and pass them on to the panelists to ensure that they are responding to them as needed. And as much as possible, if you have the opportunity, kindly direct the question to a specific panelist, and it should make it easier for it to be answered. I would like to also mention that a recording of this event will be made available at the end by Oxfam, and it will be shared. So our IT team is doing a good job of recording it. And so for future references, we'll be circulating that. So thank you again for joining us, and please encourage those who are joining to also join us for a very rich session. To help us to take us through the discussion, as I mentioned, we have distinguished panelists that have graciously accepted to join this discussion. I'll briefly highlight the panelists of the day that are leading this discussion. Ms. Regina Navuga. Regina is the tax manager for Africa at the International Budget Partnership. She's a policy analyst working on tax justice and related matters. Regina has more than 8 years experience on project implementation and management, with proven capacity in revenue mobilization and accountability at subnational, national, regional, and global levels, specifically in the areas of policy analysis and advocacy. Regina has authored and contributed to a number of policy-oriented and diverse knowledge products on tax and related matters, and has been engaging on these matters since 2019, when she worked as a program coordinator financing for development at the Southern and Eastern Africa Trade Information and Negotiations Institute, or CIATINI, based in Uganda. We welcome you, Regina, for joining us, and thank you for giving us your time. Our next panelist is going to be Dr. Hod Anyingba. Again, I'm speaking about this panelist not in order of importance at all, but yes, Dr. Hod Anyingba, a distinguished economist and policy strategist, renowned for his work in labor economics, trade, and development. Dr. Hod is the chief economist of the International Trade Union Confederation of Africa, and also doubles as the executive director of the Africa Labor Research and Education Institute. He drives evidence-based reforms that bolster trade unions, safeguard labor rights, and spur economic transformation across the African continent. So he joins us with a rich background in academic research and a consultancy for leading global institutions, where he has engaged also effectively with their sustainable development goals on matters of sovereign debt and macroeconomic policy for the benefit of the Africans. He's an author, an avid author at that, and a researcher. He has co-authored 2 Springer books on economics and finance, and recently studies on the African Continental Free Trade Area, post-implementation impact from a trade union perspective. Thank you, Dr. Hood, for joining us. Our next speaker is Mr. Douglas Kigabo Bitonda. Mr. Douglas Kigabo Bitonda is an economist. He works as an economic affairs officer in the Economic Governance and Public Finance section of the Macroeconomics and Governance Division at the United Nations Economic Commission for Africa. We fondly sometimes refer to it as UNICA. He brings over 15 years experience in economic research and policy analysis. He focuses on supporting African countries in the twin objectives of scaling up domestic resource mobilization while curbing illicit financial leakages to fund the achievement of sustainable development goals and the aspirations of the African Agenda 2063. Thank you very much, Mr. Douglas Kigabo Bitonda, for joining us. We'll then hear from Ms. Mam Diarra Ndiaye-Sobel, commonly and fondly referred to as Mam. She's a dedicated social justice and human rights activist with a strong focus on the economic and social empowerment of women, as well as protection of girls. Mam, as I will refer to her sometime, also has over 15 years of experience working with international and regional institutions. She coordinated the Oxfam International's Regional Office Program on Natural Resource Governance and Community Rights. She worked as the head of the Stop the Bleeding campaign, a global campaign on financial flows, debt, and domestic revenue mobilization. Mam is currently the executive director, Agenda Afrique. And our last but not least speaker is Mr. Taiwo Oyedele. Taiwo is the chairman, Presidential Fiscal Policy and Tax Reforms Committee, the Federal Republic of Nigeria. Mr. Taiwo Oyedele is the chairman, as I mentioned, of this committee, a committee that was set up by President Bola Ahmed Tinubu with a broad mandate to carry out critical reforms regarding fiscal governance, revenue transformation, and economic growth facilitation. Before this, Mr. Oyedele was the fiscal policy partner and Africa tax lead at PwC, or PricewaterhouseCoopers, where he worked for 22 years, including over 10 years in top leadership positions that gave him in-depth knowledge and diverse experience, ranging from tax advisory and policy advocacy to business strategy consulting, leadership, development, and policy design. Thank you very much, Mr. Oyedele, for joining us. So these are our distinguished panelists for the day. But before that, I also want to acknowledge in a special way, we have the privilege of being joined by the Honorable Minister of Finance and Coordinating Minister for Economy for Nigeria, Mr. Olawale Edun. Thank you very much for accepting to join us, to listen in, and to share your remarks, the opening remarks, which I have no doubt will resonate with the perspectives of civil society organizations and everybody else on the call today on the topic of the discussion, which is taxing high net worth individuals in Africa. Just to help us frame today's discussion in a few minutes, the discussion we are having is taking place amidst the high levels of economic inequality in Africa, and so it's not a surprise that this session is focused on Africa. just to highlight, in the year 2022, the report released by Oxfam, the Africa Inequality Report, pointed out that the 6 richest men in Africa own as much wealth as half of all the African citizens, year 2022. I'm sure these statistics have since gone worse because, as we know it, the richest man in Africa has since almost doubled his wealth. The discussion is also happening at a time where the African Union has recognized this and set an ambitious target of reducing inequality by 15% in the coming decade, and it has identified progressive taxation as one of the measures to achieve this objective as part of the Agenda 2063 plan. Just again on this, to make reference to the ongoing Financing for Development Conference, we are holding this discussion at a time when the severe platform for action on taxing the super rich was just launched yesterday. So this is a very timely discussion on the backdrop of that development. So for the first time ever, again, we are seeing the Financing for Development text speak to the need to reduce inequality through progressive taxation, specifically mentioning the need for effective taxation of high net worth individuals in Africa. This is historic. At the same time, taxing high net worth individuals is one of the topics that has been included in the terms of reference for the United Nations Convention on Tax that African countries have spearheaded. Here, special mention goes to Nigeria, and thanks for providing leadership on that. But of course, all the African countries that have backed that. So we see that severe platform for action emerging as an opportunity to gather the evidence on what is currently happening on taxing high net worth individuals in Africa and across the world in order to engage and inform the UN tax convention process. Just to acknowledge some of the developments that our allies also in the space, because we are not alone, those of us on this discussion. We know that the Africa Tax Administration Forum has begun supporting African countries with an initial assessment of taxing high net worth individuals in Africa. They are currently engaging in at least half a dozen countries on the continent. And with the incoming of the new Executive Secretary of the Africa Tax Administration Forum, Ms. Mary Baine, who took office yesterday, on the 1st of July 2025, this remains a priority, working around taxing high net worth individuals to raise domestic revenues in Africa to support the African countries. So this is the context against which we're having this discussion today. And we hope to achieve the following objective by the end of this discussion. We're creating this as a platform to generate political support and public momentum on the implementation of fair taxation of high net worth individuals in Africa. Also to provide a platform for stakeholders like ourselves to share experiences and perspectives on how taxing high net worth individuals would help bridge the revenue gap in Africa. We hope that we'll identify practical approaches and that can engage citizens in building momentum towards taxing high net worth individuals in Africa, and also promote the collaborations that is needed to achieve this aspiration. So I will then proceed from this moment to, again, in a special way, invite the Minister, the Honorable Minister of Finance and Coordinating Minister for the Economy for the Federal Republic of Nigeria, Mr. Oluwale Edun. We thank you for joining us and would like to invite you to share your opening remarks with us. I thank you, and you have the floor. As we wait for the minister or his representative to speak to us, I'd like to encourage people to introduce ourselves here in chat. Please mention your name, your country where you're from, and the organization or institution that you work with. So do we have Honorable Minister from Nigeria or a representative? Kindly unmute and speak to us. Give us your opening remarks.
Hi, Gerald. Probably they might join later. We'll just look out for any updates. But in the event they join, we can always pause.
Absolutely. Thank you very much for that guidance, Regina. So we will provide opportunity for the minister or his representative when they join to speak to us and give us their remarks. And it's a privilege to have them express interest in joining us. We will now proceed to go into the panel discussion. And our first speaker, I already introduced the speakers. Our first speaker is going to be you, Miss Regina Navuga, the Tax Equity Manager for Africa at the International Budget Partnership. Regina, would you please share with us some of your perspectives and civil society perspectives generally on taxing high net worth individuals in the context of Africa, what challenges you see, and what can be the solutions towards those challenges? Over to you, Regina.
Okay, thank you, Gerald, for setting the scene. And thank you to all the participants for joining this session today. We don't take it for granted. I hope you can all hear me very well, right?
Yes, go right ahead, please.
Okay. For us as CSOs, we believe that taxing high net worth individuals in Africa is not just a matter of revenue raising, it's also a critical step to achieving economic justice. From the North, East, Central, and West of Africa, the urgency for countries to raise more domestic revenue, and I must emphasize more domestic revenue, especially through fair and effective taxation, has never been greater. We've seen, just like Gerald has noted, inequality is deepening. Actually, it doesn't decrease, it's always increasing. And it's only fair that we have fair and effective taxation of the wealthiest who can really contribute to contributing some of these resources. We need to reduce external aid dependence that cannot be overside, and also believe that this goes a long way in building the trust in the tax systems for citizens to believe that there's value for money. So we believe that it's time for the rich people in Africa to contribute their fair share of taxes to our development. The 2030 development goals, we only have 4 years remaining, and UNECA reports constantly keep reminding us that we still have a gap when it comes to raising taxes. Most countries, while the target is 20%, most countries are averaging 16% or low. We've seen African countries continue to borrow. That's a story that we've been always talking about over and over again. And yet we know that some of these loans that we get, they are often at high commercial rates to cover the revenue shortfalls. One of the key reasons for this dependency on debt is that we still have a limited tax base, including the fact that we are not taxing the high net worth individuals effectively, who are not meeting their, tax obligations. Instead, they often hire expensive tax lawyers, secure waivers, exploit the exemptions on behalf of the companies, but also, engage in complex tax avoidance schemes. Moreover, some of these harmful tax incentives and privileges are often granted to multinational companies and the wealthy, which further erodes the tax base. These include, exemptions on luxury assets, tax holidays, among others, all of which undermine fairness and accountability. Further still, we've seen countries continue to rely on indirect taxes, especially like on VAT, imposing VAT on these everyday items that the most vulnerable use in our society. And they place a disproportionate share or burden on those who are most vulnerable. Women in particular are hit hardest by these regressive taxes and often we ensure that when you compare the income to what they spend, there's a limited space. So we believe that we've seen unrest coming up, like in Kenya. We are at a 1-year anniversary, unfortunately, even saying a 1-year anniversary. Last week, they were on the streets again, just to challenge governments to come up with fair tax systems. Meanwhile, those who have the greatest ability to pay, particularly the high net worth individuals and the large corporations, continue to contribute little. And we believe as CSOs that this is a missed opportunity. In some of the statistics that Gerard has shared with you, the high net worth individuals hold over about $1.3 million in their wealth, and just 2% annual tax wealth could generate over $25 billion in additional revenue. Imagine what that can do, what your country where you come from can do. If they had all that revenue, we could see that being used to deliver better public services. We believe that if we do not adequately tax the high net worth individuals, where else are we going to get these additional, revenues? So it's high time countries stepped up their efforts to tax those who are wealthy. But before we talk about taxing those who are wealthy, we believe that we need to know who are the high net worth individuals. Who are we talking about? Where do they keep their money in Africa? Our context is different from the developed countries. While we come back home in Africa, there is no definite definition for high net worth individuals, because high net worth individuals are all different. In Uganda, in Senegal, in Nigeria, Tanzania, the parameters that are being used in each country are different. However, there are broader parameters that can be agreed upon. So just taking in touch where people keep their money. In Senegal, it might be property taxes. In Nigeria, it might be dividends. So it has to be country specific. However, increasingly, we note that some of these key income streams, where the rich keep their money, like rental income, capital gains, inheritance, among others, are not fairly taxed. And that's where we are calling upon government to ensure that they tap into all these properties, all these ventures where the rich, keep their money. So what could be, the role of CSOs? We believe that to change this, we must go beyond technical, solutions. We must recognize that there are challenges that come with taxing high net worth individuals. There is the politics at play, those who have the power, and they're always challenging and influencing all these government systems and policies to work in their favor. So as CSOs, we need to challenge government. We need to mobilize more stakeholders to come into this space, to take up the spaces. As at IBP, we are implementing a project of strengthening civic capacities of citizens to understand the tax systems, influence, engage more with government. Our work is in Nigeria, Ghana, Tanzania. And we've seen that the coalitions that we've worked with, the movements that we are working with, people are able to step up, understand, and challenge some of the regressive tax measures that government is coming up with. We've seen that, however, we believe that we constantly need to monitor as CSOs. When you go to someone who is based in the village, they might not understand what the financing for development process is. They might not understand what the UN tax convention is, what Agenda 2063 is, but it's our role as CSOs to come in, demystify the issues, ensure that they are able to relate. What does debt mean? If government keeps on getting debt, there is great estimations. How are they in the long run being affected as citizens? We need to engage with data. We need to ensure that this data is more accessible. We need to challenge government to share this data easily understandable, which we can use to inform policies, over time. We need to be at the table. Today on LinkedIn, I was able to say that we are at the table, but what are we saying? Are we being given, spaces to effectively, taking off some of our proposals that we've been being shared broadly? To government, I also believe that we need to strengthen the high net worth individual units that they've been created. They need to take advantage of sharing automatic exchange of information. And in a special way, we need to appreciate Nigeria for some of the tax reforms that have been passed last week. We believe that that's a fair move to achieving progressivity. And as I end, I believe that taxation is not an end in itself. It's a true measure of success, which lies in how these resources are used to deliver essential public services. So we should be linking how the tax revenue is used, how it's raised, how it's used, and how it's accounted for in order to achieve social equity. Thank you, Gerard.
Thank you very much for those wonderful remarks. Indeed, taxation is not the end in itself. What then the revenues do is even more important in ending poverty, ending inequality. You've shared with us some of the challenges and some of the steps that you are taking as the International Budget Partnership with your partners and allies across the continent and beyond to ensure there's equitable and fair taxation, and specifically for today's discussion. Thank you very much again for sharing those perspectives. Let me now come to you, Dr. Hod Anyingba. As I indicated before, Dr. Hod Anyingba is the Executive Director, the African Labour Research and Education Institute, but also Chief Economist at the Africa Regional Organization of the International Trade Union Confederation. We usually use the acronym ITUC Africa. Dr. Hod, would you share with us some of the examples of progress being made from your experience, from your research, some of the examples of progress that's being made with regard to taxing high net worth individuals in Africa, and then a few challenges that you see from that, from your own work, and what role unions like the ITUC Africa and other civil society organizations can play in advocating for and effectively monitoring taxation of high net worth individuals in Africa. Over to you, Dr. Hod.
Thank you, Comrade Gerald. Warm greetings to everyone. I stand before you today not as an economist, but as a trade unionist, carrying the mandate of welders in Lagos, teachers in Maputo, farmers in Kumasi, platform riders in Nairobi. Their everyday reality is the true barometer of any financing agenda. And today, that reality is squeezed by the chronic undertaxation of Africa's high net worth individuals. Let me just say the rich and the super rich. And we know that these rich and super rich fortunes run into the millions and often billions of US dollars. And they are not able to spread this money, or we are not able to collect this money for our socio-economic transformation, the Africa we need. Now, why are these super rich or rich tax justice for these people matter? Why does it matter to us? I mean, when billion-dollar fortunes slip through loopholes, ministries slash budget that we depend on, cutbacks mean fewer labor inspectors, empty medicine for children, ballooning class sizes, and weakening of the collective bargaining that even workers have at work. Now, from the Finance for Development outcomes that surprisingly was actually echoed on the very first day where I am, the Compromiso de Sevilla. It is the outcome document of the FFD4. It actually recognizes these crises and crucially commits governments to progressive, gender-responsive tax reforms that bring top-end wealth into the revenue. Our movement, our collective voice must turn that sentence into law. It must turn that sentence into cash. It must turn that sentence into concrete benefits for workers. But we know there are some very, very critical stumbling blocks. Every government on the continent is suffering one way or the other, and workers actually bear the fullest brunt of it. For example, in Kenya, according to the Kenya National Taxpayers Association, if the rich and the super rich were contributing from anywhere around 2% to 5% of their fortunes, that would have been a third of the revenue the revenue authority would have collected in a zero. So imagine all that money was now pushed into what? Indirect taxes, into mobile money service, into fuel inflation. Indirect tax. That is not helping, right? So what are the issues that I want to underline that we all should be thinking about? The first is political resistance. There is fierce political resistance, because officials will always tell you that these, if we begin to tax them, these levies could drive the same top earners to move elsewhere, to move their income elsewhere abroad. And those are the kind of issues we have been hearing all the time. So there is some dilution of legislation in that regard. Number two, there is the paper thin asset register, which leaves revenue agent hunting in the dark, right? Because only about 10 to 15%, according to some anecdotal evidence of rural land in sub-Saharan Africa, carries formal title. So matching luxury villas or farmland to real owners is complete guesswork. Number three is administrative capacity, right? We lack the administrative capacity to actually penalize the rich, etc. Because if you are penalizing people for beneficial ownership of around the $50, I mean, this is peanut for the super rich. Number four is offshore escape hatches. They still persist. Africa still loses out, in the billions of dollars every year on these tax havens. And the most precarious one, the troubling one for me, is the corruption, the canker. Corruption corrodes the system end to end. So people are paying bribes, they have political patronage, and there's misallocation, there's siphoning of money, and all this do not actually go to the workers, to the people that they usually use it. So why does this matter to ordinary African workers? Number one, there is a huge tax burden, right? I mentioned these indirect taxes that Comrade Regina also talked about, because then women and the youth are not able to have enough disposable income to do their work and to do business. There is also a huge burden on public services, healthcare, education, social protection, pensions. There is not much, money circulation to do the work. There is the huge inequality gap that Comrade Moderator mentioned at the beginning of the presentation, in the show. And then there is that tax, contract that we are talking about. So all these are issues, and for us as unions, we are saying that in closing, we are saying that we need to target these, national wealth register coalitions, right? So that we can bring, revenue authorities, land registries, the unions, together with journalists, together on one platform. The second is that we should have an African Wage and Wealth Observatory. We can all be part of it, so that we publish annual data. We can track these 1%, effective tax rate against, the super rich. And then don't forget, we have the African Union framework that we hope to get on minimum wealth tax standard, so that we don't have that race to the bottom that pits worker against workers across boards in this investment market. And then lastly, look, let us have a just transition levy on the extractive sector windfalls, because what is in the ground, we are not able to get the benefit for the people who live around these minerals extraction sites, let alone our economy. So for unions, we are very, very concerned. We hope that the Compromiso de Sevilla gives us some text that we need to work on, and we need to carry on that button.
Thank you very much, Dr. Hod. And I should also mention that you are joining us live from Sevilla. So you are able to take part in both these virtual discussions, but also in the discussions that are happening live from Spain. Thank you very much for your submissions. You did indicate to us what some of the challenges are, including tax havens, the cancer of corruption, the lack of administrative capacity sometimes to effectively tax high net worth individuals. And you capped it off with a call for greater collaboration between civil society and Trade unions are civil society, but sometimes we don't collaborate enough. So you capped it off with a call for closer collaboration to push for more effective and equitable taxation of high net worth individuals. Thank you very much for your submissions. Colleagues I would like to continue encouraging you all to engage through the Q&A function at the bottom of your page. If you have questions and comments, kindly direct them to a panelist that might address them. We'll be sure to pick them up. Those who are joining us, as we're already running, kindly introduce yourselves through chat and introduce yourself by name, the country where you're joining from, and your institution or organization. This will help us to know who we are and who we are engaging during the course of this discussion. Let me now take us to the next panelist, who is, we fondly refer to her as Ma'am, Ms. Ma'am Diarra Ndiaye-Sobel. I already introduced you, Ma'am, as the Executive Director of Agenda Afrique, based in Senegal. Ma'am, would you tell us about the current context around taxing high net worth individuals in Senegal? What are the recent tax reforms in this direction, and how they have disproportionately impacted small businesses and entrepreneurs, particularly women? Would you tell us about the context in Senegal and your view on what civil society can do, how civil society can and citizen movements can work together towards more equitable taxation of high net worth individuals in Africa? Over to you, ma'am. And before Ma'am speaks, colleagues, kindly select your preferred language at the bottom. Choose where I have interpretation in Spanish, English, and French. So you can speak in the language that you're most comfortable with. Ma'am, if you are able to join us, please give us your remarks. All right. Ma'am, Miss Ma'am Diarra Ndiaye-Sobel? Right. So maybe we'll come back to Ma'am at some point. And apologies if it is that you are speaking and I'm probably not hearing you well. We'll come back to you in a second, ma'am. Our next speaker from the Federal Republic of Nigeria, Mr. Taiwo Oyedele. Mr. Taiwo, the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms in Nigeria. From a government perspective, Mr. Taiwo, would you share with us the progress that Nigeria has made, and specifically the Presidential Committee on Fiscal Policy and Tax Reforms, the progress it's making, and how this is contributing to the broader goals of tax equity and social justice? Speak to us about some of the specific challenges of Nigeria with regard to taxing high net worth individuals, and how governments and citizens and civil society organizations can work together towards building trust and promoting more effective taxation of high net worth individuals. Maybe with other countries that can also learn from Nigeria. Mr. Taiwo, you're welcome to speak to us.
Thank you very much. I'm sure you can hear me. Can you please let me know how much time I have to speak?
Would you please speak to us for 7 minutes, and then we'll come back to you for anything that we'll need to clarify.
Okay, so that's very enough. So good day to everyone, and thank you very much for inviting me. Yes, the challenges that we're having to deal with in Nigeria in terms of taxing high net worth individuals are very similar with the rest of Africa and most of the developing countries. In fact, we like to say that when you look at the high net worth individual segment, we think they are the hardest to tax segment of society, even more than the informal sector. But deciding to do the right thing requires political will. It requires knowledge. It requires, more importantly, use of data. So we started from a situation where in about 8-10 years ago, we had less than 5% of the tax revenue coming from personal income tax, coming from the high net worth individuals. Whereas what the data shows around the world is that in countries where you particularly have high level of inequality, like South Africa, like Nigeria, you should expect actually the top 1% to pay more, to contribute more in tax revenue than the bottom 99%. So that is the case in South Africa today. That's not the case in Nigeria, and that's because the South African tax system, and also by extension, the South African Revenue Service, have become more effective in trying to tax high net worth individuals. And it's not surprising that their tax to GDP ratio is in the region of 26-27%, compared to Nigeria hovering around 10 until recently, where we are now at about 13.5%. So it's important to put that context in proper perspective. What we have been able to do is, thanks to our current administration led by His Excellency President Bola Ahmed Tinubu, was to set up a committee, and I had the privilege to chair that committee. And we were allowed to do our work professionally. Nobody dictated to us. We're not influenced in any way. And that has helped us to address a lot of the loopholes, particularly from the legal point of view, the legal framework. Because what the high net worth individuals tend to do is use their influence to ensure that there are loopholes in the laws, to ensure that they get incentives. Sometimes they are able to access waivers that others cannot access, thereby not only denying government of revenue, but also creating inequity in the system and economic distortion. We have to remind ourselves that the high net worth individuals are likely the owners of businesses as well. So if you can fix the problem of getting them to pay the right amount of tax, you begin to address inequality in a broader sense, not just in terms of individuals, but in terms of the business environment between small businesses, mid-sized businesses, and people who have no access to powers that be, to be able to operate on a level playing field, which is really important if we want a society that is prosperous and is inclusive. So essentially, the approach we have adopted was first to try and do a review of the existing legal framework. What are those incentives that we believe are not only wasteful, but are distortionary? We also looked at our tax laws, and it would surprise many people that until now, because our new tax laws were just signed into law just about a week ago, until now, if you earn about $1,000 equivalent a month, you would easily be paying the top marginal income tax rate in Nigeria, compared to someone who is a high net worth individual earning about $1 million a year. So we have that fiscal drag, which we have now addressed, to create exemptions for a higher threshold for exemption for low income earners, as well as for small businesses. Because it's important, as we're speaking about how to tax high net worth individuals, we must balance that conversation also with how not to tax poverty, to ensure that we're also promoting promoting equity and a just society. So we have that progressive tax rate now in our tax law. We also looked at other areas, because if you ask yourself, what income do high net worth individuals earn? So they tend to earn investment income, like dividend, like rental income, royalty, interest, they also have capital gains because they're able to buy assets. They're able to invest in the capital market and make capital gains. And all of that is good. By the way, we want more high net worth individuals in Africa. We just want them to pay the right amount of taxes. They also earn returns from intellectual property, intangible assets. And what do they do with the money that they have? And then, of course, they spend. So lifestyle, luxuries, and then they save. If we're lucky, they save those monies in Africa. In some cases, they take them out of Africa, which is a shame, and then they invest. Now, the approach we've adopted is to ensure that the income aspects, the taxes are progressive. We close the loopholes in terms of waivers and incentives. And then we ensure that for capital gains, for example, we have a threshold in our new laws where once you exceed that threshold, you pay capital gains, you do sell shares in the capital market. Below that, you don't pay. And it's cumulated over a period of 1 year. We also have, provisions to get intelligence and data from how high net worth individuals spend their money. So if you're spending, we're going to be using third-party evidence to validate the income that you declared. So if you declare that you earn income of $1 million, but we see your spending is more than that, then you have questions to answer. We also want to ensure that when they are investing, we do not discourage them from investment. So if you make a lot of money and you want to invest, what we've decided to do in Nigeria is not to tax capital and not to tax investment. Keep reinvesting your money and we're all good. But once the returns on your investment comes in, you need to pay taxes, as well as if you decide to save the money, depending on what you are saving the money on. So essentially, we have made progress. We are just beginning the implementation of our new regime for the tax system in Nigeria. We're spending the next 6 months until the end of 31st December 2025 to build capacity, to get data, to enlighten the public, because this transformation we have, it's nothing we've done ever in the history of Nigeria. So it's quite, extensive. There is also the connection with the international community. Both internally, we have the coordination of data, handshake between the subnational and the national government, as well as with the international community in terms of exchange of information and collaboration around capacity development. So what is it like? I think one of the questions you ask also is, how do we get, the civil society to support and the rest of it? I think it's important for the civil society to ensure that, one, they try and do their analysis and commentaries and reports based on credible data. It is not helpful when we try to do crowd-pleasing analysis. And I'll say that because one of the things we're really hoping to do in Nigeria, we couldn't do, we're not very successful with it, was that VAT generally, the theoretical, conclusion is that VAT is regressive because it's a flat rate for everything, right? What we've done is to design our VAT system to actually make it progressive. And we looked at the basket of items that the, low-income earners would generally consume. And we found out that they spend between 80 to 100% of their income on food, on education, on healthcare, accommodation, and transport. So we made that deliberate decision to remove VAT on food that is zero rated, food, healthcare, and education. And then we exempt transportation and accommodation. And because we did that, we were very confident that the right thing to then do was to increase the VAT rate on the remaining items that are not essentially consumed by the low-income earners. That was meant to make our VAT system progressive and get the high net worth individuals pay a little bit more, even from their consumption. Unfortunately, the civil society in Nigeria were some of the people that, were against that reform, going to town with the analysis of, no, if you raise VAT rate, inflation will go on top of the roof. It was not very helpful. So I think using credible data, well analyzed, getting insights from experts, and not doing crowd-pleasing analysis will be extremely helpful for us going forward. So I think maybe the last point I'll make is, in trying to tax high net worth individuals, in addition to what I've said, and I also listened to the last speaker with very useful points, it's also that we need to connect the dots. This cannot work in isolation. As you're trying to address this from the taxation point of view, you have to ensure that you have, information around unexplained wealth order, beneficial ownership, asset and liability declaration, particularly asset declaration for people in the public sector and in the financial system, and also ensuring that at the end of the day, there are consequences for when you find people who are violating these laws. Otherwise, if you have the laws and you don't enforce them, it's good at not having anything at all. And if we can make this work such that the high net worth individuals begin to pay their fair share of revenue to the government, they are also in a position to begin to hold government to account. So, and that becomes a win-win outcome for society, which I think we desperately need in Africa more than anywhere else in the world. So thank you very much for the opportunity.
Thank you so much, Mr. Taiwo, for wrapping that up, emphasizing the social contract between citizens and the state. Nigeria continues to be a leader in this space, so we do acknowledge your leadership in all of this, but also particularly in pushing the UN Tax Convention and many other areas. So thank you very much for making time to join us, colleagues. I'm sure there might be questions and comments to your submissions. Colleagues, kindly put them in chat, and with time allowing, we'll be able to have our panelists to respond to them. I just want, before I go to you, Mr. Kagabo, I just want to check if Ma'am Diara is able to join us now. Yes, and just to say there's a lot of heads up for your submissions, Mr. Taiwo. Very interesting to all of us. Ma'am, have you been able to join us, please? All right. Okay. So, ma'am, excellent, ma'am. We do recognize the technical challenges that may be disrupting you, but we wanted you to speak to us briefly about progress around taxing high net worth individuals in Senegal, in how the tax reforms disproportionately impact small businesses and entrepreneurs, particularly women, and what civil society and citizen movements can do to work together towards more equitable taxation in 5 minutes. Ma'am, are you able to speak to us? And go ahead, please.
Merci beaucoup, Gérald. Est-ce que vous m'entendez? Je m'excuse davantage des bruits de fond parce que je n'ai pas pu trouver un endroit isolé. On est à la conférence des FFD pour ACD. Et donc, pour répondre à votre question, nous avons quelques constats au Sénégal qu'on peut considérer quand même comme des progrès. Par exemple, mais le Sénégal n'a pas encore mis en place un mécanisme d'impôt sur la fortune, mais il impose l'impôt sur le revenu. Et cela peut aller jusqu'à 40% des revenus fixes. Et ce qui peut constituer quand même des équilibres entre ceux qui gagnent plus d'argent et ceux qui en gagnent moins. Il y a également la taxation sur le train de vie, par exemple, qui incite à vérifier les avoirs réels des personnes. Par exemple, si tu déclares $100,000 de revenus mensuels et qu'on constate que tu as un train de vie de plus de $50,000, cela incite à aller vérifier où est-ce que tu trouves ton argent. Non seulement cela permet de faire des rectifications vis-à-vis de la taxation, mais c'est un mécanisme aussi très efficace de lutte contre le blanchiment et la fuite des capitaux. Et donc, ça, c'est un mécanisme assez positif. Et il y a la fiscalité neutre aujourd'hui au Sénégal qui permet quand même aux femmes de bénéficier de certains avantages par rapport au nombre de parts que les femmes maintenant peuvent déclarer selon leurs enfants pour bénéficier de certains avantages. Et en plus de ça, nous espérons que la réforme prochaine du Code général des impôts va intégrer des impositions sur la fortune. Mais cependant, nous avons constaté d'une façon quand même dont le système fiscal affecte sur les communautés. Et nous avons vécu avec les communautés en tant que partie prenante très engagée avec les femmes et les jeunes. Et cela est très négatif sur leur évolution économique. Par exemple, les populations vulnérables sont très affectées par la TVA sur les produits de base, tels que le riz, le savon, les serviettes hygiéniques et l'huile. Et ça, c'est des denrées de première nécessité. Il faut qu'on les achète. Et les citoyens qui les achètent n'ont pas le pouvoir de négociation sur ces impôts-là. Et les jeunes femmes entrepreneurs et les jeunes, par exemple, du secteur informel, subissent des taxations arbitraires sans bénéficier de services publics tels que les infrastructures, les crédits pour les accompagner, les formations pour les accompagner. Par exemple, l'année passée, nous, on accompagne des jeunes entrepreneurs femmes et nous avons constaté qu'une partie de nos cibles, elles ont subi on les a demandé de payer des accumulations de taxes. Et cela a fait que la majeure partie de ces femmes-là n'ont pas pu travailler parce que pour une jeune tailleur, une jeune couturière, si tu fais sortir en un seul coup 500 000 francs CFA pour 1 million de francs CFA, tu vas simplement fermer ta boutique pour l'événement. Et on sait que les tailleurs ici, les couturières, ils ont leurs événements lors de la tabaski, lors de la corruption. Ce sont les fêtes de l'Aïd, les fêtes musulmanes. Et ça aussi, c'est des inégalités qu'il faudra voir. Et donc, voilà. Et les exonérations fiscales accordées aux grandes entreprises aussi et aux élites coûtent des milliards de francs aux contribuables. Et cela pourrait financer des services de base comme l'éducation, la santé, l'emploi, etc. Nous avons certaines remarques. Je ne sais pas si encore j'ai le temps de continuer. Sinon, je pourrais attendre un deuxième round de questions pour compléter. Parce que le manque d'infrastructures publiques dans les zones rurales et périurbaines aussi pénalise l'accès au marché, l'accès aux infrastructures et l'accès aux fonciers aux femmes qui travaillent dans l'agriculture ou bien qui travaillent dans la tannerie, qui travaillent dans d'autres aspects économiques qu'on pourrait intégrer dans le contenu local. Et donc, voilà pour un premier temps, pour ne pas trop empiéter sur nos constats, et on va y revenir si on a l'opportunité.
All right. Thank you very much, ma'am. And just thank you for joining us and indeed sharing on the gendered impacts of taxation when tax is not equitable, particularly impacting even more negatively on women and girls. Thank you very much for being able to join us. We have one more speaker, and then I'll open up the discussion for questions and comments. Continue to type your questions and comments in the Q&A section at the bottom of the screen. And also, if you joined us later, please do introduce yourself in chat. When you do, kindly indicate for us your name, the country where you are from, and which organization you are working with, so that we know each other, and it's a way of connecting with each other. To you, Mr. Douglas Kigabo Bitonda, what policy innovations or fiscal tools that the United Nations Economic Commission for Africa recommend for more progressive and equitable taxation, and how is UNECA helping African states to engage in the financing for development process to reform global tax rules and boost domestic revenue mobilization?
Thank you very much. I'll try to be short and probably have more time for question and discussions. And as probably you all know, UNECA has a mandate of supporting African countries or member states achieve sustainable development. And this is done through core functions of the organization. Think tank role, convening role, but also the operational role or technical assistance that we provide to member states in that regard. At the heart of ECA mandate to support sustainable development in Africa is the commitment to help African countries to expand their fiscal space, especially in today's context of global fragmentation and inadequate international financial support, which creates mounting pressure to raise domestic resource to fund Africa on development. And of course, strengthening or enhancing domestic resource mobilization requires actually looking across different binding constraints to that, which include a number of factors such as large informalities, inefficient and outdated tax systems, actually, which are being really exploited by bigger and wealthier people, and also very significant revenue leakages in the Africa tax systems. I'm sure all of you know that one major challenge of Africa tax system is its limited clarity around the tax base, fragmented or poor quality data on income and wealth, and many systemic issues or weaknesses that severely limit not only the ability of African countries to collect sufficient resources, but also undermines the goal of progressive and equitable taxation because of systemic weaknesses and issue around the Africa tax systems. I'll give a clear example that we encounter every day in our discussion and engagement with member states. For example, the issue around property tax, which is usually cited as a high potential revenue sources, but efforts across Africa have yielded really uneven results, especially due to challenges such as ownership, challenges in ownership data, valuation, and tracking asset-related income. So this really complicates the whole approach to increasing revenue and to achieve progressivity as we intend to do. So to achieve or to support or to navigate, to support country navigate through these challenges, ECA through different work streams support countries through the different mechanisms, tackling challenges across different angles of the Africa tax system. First of all, ECA believes that efforts need to be made on broadening and deepening tax base, especially making sure that we tap into underutilized but high potential areas. I've just mentioned the property and wealth taxation, the mining and extractive sectors. Proper taxing of this sector should ensure that high-income individuals and entities contribute a fair share of tax. We've been engaging with countries like Ethiopia on property tax, and you can see that potential is huge, but achieving this potential will require addressing the systemic issues, especially around data and detail about ownership, asset valuation, but also the flow of income from these assets is a very, very potential area, but require greater works. Second, UNECA has always recommended or emphasized on the need to leverage on modern technologies to modernize and digitalize tax systems. This really has potential to not only improve or address tax administration inefficiencies, but also tackle issues related to corruption and improve tax compliance. Evidence across Africa in countries like Kenya, South Africa, and most recently Rwanda as well, can show that promising examples. But of course, these require really looking into challenges such as platform fragmentation, limited digital literacy, weak legal framework, and cybersecurity risks and inadequate infrastructure, especially in rural areas. Third issue, where ECA has been significantly involved, is support African countries reduce revenue leakages from the system, especially
So sorry, Douglas, I think you are muted accidentally. Yeah. All right. And I hope you're summarizing now so we can open up the discussion.
Yes.
We'll have some time to get back to you. Yeah.
Someone muted me accidentally. It's to tell me that my time is over?
No problem. But we'll have another opportunity. We'll come back to you.
Revenue leakages through IFF, but also unproductive tax incentives. This is a bigger source of
all right.
revenue. And to conclude, let me probably highlight what UNECA does to support African country engage in FFD. We've provided policy and technical guidance to support Africa Group in New York, really to engage in negotiation about the international tax cooperation.
Right.
We've advocated for coalition building to ensure South-South cooperation. And of course, we've ensured that the Africa position is reflected in the FFD discussion that are ongoing. I submit.
Thank you. Thank you very much. And we will come back to you. Colleagues, thank you very much for staying on this session. I do recognize that we are slightly over time, but then this is a very interesting conversation. So I'm excited that you are able to sacrifice and stay a little longer. So we'll keep it going for a few more minutes. If you have questions and comments, this is the opportunity. You may either type it in the Q&A function, and you'll see that button at the bottom of your screen, or alternatively, you can raise your hand and we'll be able to pick you up and you will make your submissions. And kindly keep it short. This is a very exciting conversation, but time is not always on our side. I think there was one already in chat. It's in chat. It's not in Q&A, but I think I saw one. To you, Mr. Taiwo Oyedele from Nigeria. Who are the high net worth individuals in Nigeria? In what mechanisms do you anticipate for ensuring fair implementation and enforcement of the aspects of the new law? Mr. Taiwo, I'll give you a minute just a little later. But before that, shall we hear from you, Mr. Fred Njehu, please?
Yeah, thank you, Gerard, and thank you to all our presenters. Mine will be very quick and short because of time. To our presenters, we know the complexity of the high net worth individuals in terms of how they shift their money. And this is an example, particularly in Africa, where our wealthy, highly wealthy people actually stash their wealth abroad in tax havens, and they shift this money either through proxy companies or other means, tax avoidance means. And so for this discussion, I think I challenge us to think beyond the African continent. How do we cooperate with the global North countries where the African wealth is being shifted and transferred? And I think the UNTC process, the UN Tax Convention Framework process, is one of the opportunities for us to have those negotiations and discussions. But also importantly, how do we ensure we have bilateral conversations to tackle such complex issues? Thank you. Back to you.
Thank you very much, Fred Njehu. And I do imagine that you are in Sevier as well, right? So thank you for making time to join us online. Mr. Taiwo, do you want to respond to the question that was put to you? And then colleagues, continue to engage in Q&A, and you may also raise your hand and we'll be able to pick you up. And you can please address your question or comment to a specific panelist if that would be possible. That would make it easier to respond to it. Mr. Taiwo, would you want to quickly respond to that?
Yes, sure. Thank you very much. Thank you to the person that asked the question. So for us, we use, because wealth is relative to different countries, it's also a function of the purchasing power of people in your country. But whatever it is, we looked at the top 3% of society in terms of income and wealth as our high net worth individuals. But we also extended that to high income earners who may not necessarily be high net worth individuals. And then we said, well, this would be in the region of the top 10% of society. So while we have designed our new tax laws to exempt 1/3 of workers in the private and public sector, we've also reduced the tax burden on the middle class. We have raised it marginally on high income earners and a little bit more on high net worth individuals. So it's a combination of income and wealth relative to, the purchasing power in our country and the rest of the population. We're building a tax intelligence system where we're going to be able to connect the intelligence within the system, from investing to saving to spending, your bank account, buying assets like land, buying, vehicles and all of that, and even your phone. And all of this will help us to piece together the available information so that if you underdeclare, we're able to then find out and get you to pay the right amount of tax. So essentially, those are some of the measures we are taking at the moment to address this area.
Thank you very much, Mr. Taiwo. There is a question. We were encouraging participants indeed to put the questions in the Q&A. There's one that was put in chat. It's a little long, so I'm not able to see all of it, but it's from you, Daya Olaide. Do you want to instead speak it out so that you address it to the person that is best placed to respond to it? Do we still have you on call, Daya Olaide?
Can you hear me?
Please, go ahead.
Excellent. My name is Dayo Laide, and I'm joining the call from Canada. And thank you, Mr. Taiwo Idele, for the response to my initial question. I think the point that Gerald is referring to is more of a recommendation. And here, pointing to the rich body of knowledge that exists around that explains some of the behavioral challenges to compliant. And so here, my recommendation to you is to draw your attention to the possibility of working with high net worth individuals as ambassadors, in particular to the aspect of the new law, so that you are able to have them on your side, have them come out and speak out that, yes, I mean, I'll use myself as an example to better illustrate what I'm trying to say here. So if I was a high net worth individual and I am paying my fair share of tax, and I can come out and speak to the rest of my peers that actually last month or last year, I paid X amount, and this is why I am doing it. I think it has a very powerful way of also encouraging other high net worth individuals who are my peers, but also, addressing this misconception that my peers are not paying at all, which is a major reason why many high net worth individuals will not even want to pay, because they have this wrong belief that, others aren't paying, so why should I pay? So that's basically my recommendation, my recommendation there. But also that, you may also want to consider making the information about high net worth individuals' payments and their contributions also more public, so that the public can see truly how much are they contributing to our tax revenues. The final point, if Gerald would let me, is a reaction to one of the points that Mr. Oyedele made regarding civil society who engage in crowd-pleasing analysis. My reaction to that is to say that, it's very easy for us to externalize many of these challenges and just to blame civil society. But I think you might also want to revisit the engagement mechanism or the engagement tactics of your team. Could it have been that the problem really is as a result of the inadequacies in how you actually engaged civil society organizations? If you had engaged them differently, do you think they could have been more friendly or even more partner, collaborative in their responses? Right. I yield the floor. Right. Thanks, Gerald.
Thank you, Dayo, and also for using yourself as an example, only to not confirm if you're a high net worth individual or not.
I'm not.
But thank you for the recommendations and for everything you've shared with us. You've shared mainly recommendations, really, and I'm sure that Mr. Oyedele takes them in good faith. But there was a comment from Fred Njehu that I thought that maybe you, Mr. Kagabo from ECA, would want to respond to, or any speaker that panelists that would want to respond to a particular issue that was raised, this is the moment. And allow me to drag this to the top of the hour so that we close right at the top of the hour. Pardon me for engaging you longer than I had promised. But yes, in the next few minutes, we can be able to wrap it up. Douglas, do you have any responses to Fred?
Yeah, I would very, very much agree with him that first of all, we need to understand that the issue of tax avoidance or the illicit financial flows that I mentioned in my intervention is a global issue. It's really not an African issue. And we can't address a global issue by just focusing on Africa, because players cross borders and continents, especially with transfer of capital in the offshores and so ECA has been significant. I mean, has been trying, for example, in the work on IFF, trying to first of all work with country to identify the assets stolen. Trust me, identifying them may be easier. I mean, not necessarily easier. There is a mechanism, there's a methodology, there's approaches you go through to identify them, but recovering them, getting them back to Africa require very complex legal aspects, country to country, global agreements. But of course, there are global infrastructure that are there that actually encourage cooperation around data sharing and what. But of course, there are still gaps there. Second, if you look at the multinationals and the taxing multinationals, the issue of benefit erosion and profit shifting. This is at the core of the ongoing discussion about reforming the global financial architecture and coming up with an inclusive framework for international tax cooperation. EC has been really championing the move from richer dominated countries to drive the global tax rule towards UN, with the assumption that if this is done under UN auspices, we may achieve this inclusivity that we want to achieve. And one of the milestones is actually the recent agreement on the framework, but of course there is a long way to go to negotiate the clauses, the approaches. And trust me, already these wealth people, especially G20 countries or G7, there's a huge opposition to that. Why? Because there are conflicting interests in this. So I agree there is a need for not only global but regional cooperation. That's where Africa needs. We need to build regional blocks that can enhance our voices to the global scene, and go beyond the regional, achieve the South-South cooperation. That's why we can have broader voices that can influence the global discussions. Thank you very much.
Thank you very much. Thank you. Indeed, this is a global issue, and thank you for highlighting some of those efforts. Just to mention again, colleagues, that you can use your preferred language. There is a channel at the bottom of the screen, so you can choose French, English, or Spanish. We do have simultaneous interpretation, and it should be possible to communicate in any of those three languages. Unfortunately, my limitation will be translating in all the languages, especially what is typed in chat. So as much as possible, if you're non-English speaking, I would encourage you to raise your hand and speak in your words, and then it will be interpreted simultaneously for us to be able to pick it up. So thank you again for those comments. Checking in chat, I do not think I have any questions or comments yet. So to the panelists that spoke, especially those that spoke first, Hod, Regina, Mam Diara, what are some of the views and opinions that are sticking out for you that you would like to respond to as we move towards concluding today's discussion? Regina, is there anything you would like to very quickly in 1 minute respond to?
Okay. I think for me, the South-to-South cooperation is very important. Building strong movements coalitions working together going forward, but also connecting the dots and ensuring that citizens can actively engage. I also like the issue that was raised that we need to use the high net worth individuals as ambassadors. I know in Uganda, where we have the high net worth individual unit that was set up, those are some of the mechanisms that they are using, but also to call upon civil society to participate in all these processes. And this has just begun. There's a long way to go, but there's hope. There's been a mention and key highlights of and emphasis in the financing for development process of high net worth individuals.
Yes.
Even in the UN tax process, but also the Addis tax initiative talks about high net worth individuals. So it's only fair that countries as well at the national level come up with strategies on how to tax high net worth individuals. Thank you.
Thank you very much for that. Is anything hot? Do we still have you hot? Or ma'am, that you'd like to quickly respond to as your parting shots? Mr. Taiwo, do you want to give in 1 minute any parting shots that you may have?
Yes, certainly. I'd like to. So thank you very much once again. And to the participant from Canada, so I do hear the point, and I'm not going to be defensive, but we've also been in touch with the civil society in Nigeria to say, if you were doing some analysis, you shouldn't publish the report before you have discussed with us. We're engaged, so it's nothing confrontational. It's just about how we can work together better going forward. I do think that more generally, it's important to have a framework for how we impose taxes, how we collect those taxes, how we report them transparently, and more importantly, how those are utilized for the purpose and benefit of the people. We had conducted a tax perception study in Nigeria, and the point is valid that based on social norm, if other people are not paying, you do not want to pay. That is why we have to be intentional in ensuring that we get everybody to pay fairly and be seen to be paying fairly as well. I was also privileged to be part of the team for the African Union, trying to develop a strategy for Africa around resource mobilization, and there was a particular focus on high net worth individuals as well. So I think it's all coming together. And hopefully when we have these meetings in the nearest future, we have some results and outcomes to share.
Thank you. Thank you very much for capping it there. Colleagues, it's been an interesting discussion. Just to highlight again some of the key emerging opportunities that we are identifying at around this time. With the launch of the Severe Platform for Action on taxing the super rich, and this subject of taxing high net worth individuals in Africa gaining prominence, we are seeing Brazil, Spain, and in Africa, South Africa, being a key supporter of that. We do hope that perhaps we'll see more African countries in support of that, so that we take forward this move on more equitable and progressive taxation to raise domestic revenues that are needed to provide services that reduce inequality in Africa. I also do want to mention that we made reference to some of the figures on inequality at the beginning of this discussion. So the last report that we made reference to was published by Oxfam in 2022. But Oxfam in Africa has also been working on a new publication, a new updated report on the status of inequality in Africa. So a new report on the status of inequality in Africa will be launched in the coming month. It should be we are already in July. We're working towards launching the Africa Inequality Report. It will have a specific chapter dedicated to taxing high net worth individuals in Africa. So some of the perspectives that were shared here will find their way into that report. So we have greatly enriched that piece of work. Kind of look out for that publication when it comes out, and let's use it as one of the avenues to keep engaging on this important subject. Again, it's been a privilege to have you all here to discuss today's topic, which was raising tax revenues in an equitable and inclusive manner through taxing high net worth individuals in Africa. Your input, your submissions have been very enriching, and we thank you for making time to discuss with us. This is happening on the sidelines of the 4th Financing for Development Conference, physically in Spain, and we know that it's still going on. So thank you for making time and contributing towards this historic opportunity to review and reshape global taxation frameworks with a view of promoting. Before I sign out, ma'am, of course, ma'am, I'll give you some 1-2 minutes because unfortunately technology didn't let you submit properly. Ma'am, I will give you some time. Ma'am, are you able to speak before we wrap up? Your hand is up. Hi, ma'am. Do you want to speak now? Yes. Go ahead, please. You are the last speaker today. Ma'am?
La mobilisation des forces, et notamment là, je vais faire un focus sur le continent africain. On ne peut pas, aborder ce problème des réformes mondiales sans pour autant avoir des mécanismes concertés au niveau du continent qui puissent nous permettre de porter notre voix face à des qui sont beaucoup plus forts que nous. L'autre aspect, c'est la dimension.
Right.
Et aussi, en compte les communautés pour que, quels que soient les avantages économiques, qu'on puisse prendre en compte les femmes, les jeunes et les personnes les plus vulnérables dans les réformes, que ce soit au niveau régional ou au niveau national. Et aussi en faire un problème de contrat social qui permette aux gens de s'imprégner de le problème de la fiscalité pour pouvoir l'intégrer et d'en s'acquitter. Merci beaucoup.
Right. Thank you very much, merci beaucoup. Unfortunately, it was not possible to interpret that, but we do appreciate you making time, ma'am. In spite of the challenges that you have had with technology, we do appreciate you making time to make those important submissions. So look out for the recording of this session. As I indicated at the beginning, it has been recorded and will be shared by Oxfam colleagues. It's a pleasure. Let's keep working together towards making tax more equitable and progressive, and raising the revenues that Africa needs to finance delivery of social services and fight inequality. It's been my pleasure. I am Gerald Biarugaba. I work with Oxfam in Africa, and see you all around in the spaces. Bye-bye for now.